Hello, good afternoon. I hope you are having a nice afternoon. I've decided that we learn again to come back to the charts, and I want to show you something very quick here. This one is going to be a short one, and just concentrate and you will learn something here. So this volatility 50 index on a 5 minutes chart, this is on 30th. The month is just almost collapsing, and it's a power of three formation that I've been talking about: the accumulation, manipulation, and then distribution. So as you can see over here, we have been on an uptrend. This is a trade I took and I lost, and it's okay, it's fine, because the risk was defined through these ranges here, and the stop loss was hit, and that's the part of this business. That's part of this business. So the day opened on 30th. I have marked it out, as you can see, and I want us to find setups over here. So this is a 5 minutes chart, and as you can see, during the 2-hour open, this is the kill zone. As I told you earlier, kill zones do happen after every 2 hours of each and every session, and the day has got 4 quarters. Those are 4 sessions: the morning session, there is an afternoon session, or rather there is an Asian session, the London, the New York, then the afternoon session. Those 4, and on each sessions you can find setups. So as an intraday trader, you are supposed to set your trading times, and before that, then let's say the night before tomorrow, you just have to plan your trades. And how do you plan those trades? By following the institutional order flow, by knowing the market structure. That is the goal for each and every trader. Because if you don't know the market structure and the institutional order flow, then I don't see if you have got any business pulling the triggers. Because you must understand what the big money traders are doing, the smart money, that is. So basically, from this day on 30th, you can see there's a fair value gap beneath here, which was taken. The sell side liquidity was taken, and the rejection, you can just evidently see how we displaced higher. It was something that has been hidden. And as I told you, the daily openings, the 4-hour, the monthly, are highly resistance and support areas. You can evidently see the resistance on the daily time frame here. Came back to retest the fair value gap to induce sellers to go into the marketplace. This is what is doing here. This is what the market is doing. It's manipulating your minds. It's making you your mind think in a very disorganized manner. That's why a little bit of patience and discipline is required in this game. You have to understand how you react. You have to understand yourself, your personality, you have to know. And for you to earn over here, you have to have a strong belief on what you have find out. Because if you don't have belief, then this business is going to be very, very difficult for you. It's not going to be easy. So as you can see here, the displacement happened after inducing the sellers. We displaced. These are energetic run, guys. So after displacing, we created a fair value gap over there. Then retested the fair value gap beneath here. Let's go to the 2 minutes time frame so that you can see things better. You know, this is what I tell you. I'm showing you intraday trades that are happening in every sessions. As I told you, you can find setups on each and every session. So this was a minute 5 fair value gap. I hope you saw it. We came back to an order block. There's an order block beneath here. I hope you can see it. This is an order block. The whole of this. But this is a propulsion block. An order block is from here to here. This move, the last down close candles before the initial run higher that created the market structure shift. So this is the order block. The whole of this from here to here. This is the order block. And then this one is the propulsion block. This is the propulsion block. The last bearish candle before the immediate run higher. So our kill zone, as I told you, is between 2 o'clock to 5 o'clock. Our kill zone takes 3 good hours. That's where you are hunting for setups to go long. And this basically a nice setup, and very nice setup, but for me it does not align with my personality. This one, it doesn't, for real it doesn't. So for me, I require more data so that I can take the balls. This one is very technical for me, and maybe there are some who can do that, but for me, the risks that are defining risks on taking this trade, for me it's very difficult. So for me, I wait, and after waiting, you can see evidently we displaced above the daily open, tried to find support on the daily open, went higher. These are fair value gap that was formed on the 50 minutes time, on the 5 minutes time frame. So you come up with your Fibonacci retracement to buy if the prices retraces below 50% of this dealing range of hours that caused the displacement, breaking the structure to the upwards. So we mark it out so that you can be able to define also our risk, because without you defining the risk, it becomes very difficult for you to measure the progress, because you'll start acting impulsively so that maybe you can recover maybe the said losses, and that's when the markets become very tricky and you cannot navigate through it on an informed manner. So let me mark this out, the buy side, the sell side liquidity that was engineered. This is an engineered move. This one, after taking buy side, we broke the structure to the downside. This one, we induced sellers again, and there are many trades here. Yes, you can see we broke the structure after taking side buy side, and we are trying to find a retracement below 50%, which is here, of this dealing range of ours. So our buys are supposed to take place below 50% of this dealing range, and our stop loss is supposed to be somewhere here. Our stop loss is supposed to be I told you our stop loss is measured is the 25% of 25 to 0. I don't know how I can put it better in layman's terms, but that's the best I can do. The stop loss is placed at exactly 25% of our predetermined Fibonacci levels. Let us make it a dotted line. Let's remove this one, then we continue. So after our retracement back below the 50% of our displacement on the 5 minutes fair value gap, what happened? When price gets below the 50%, and this is an engineered liquidity of relatively equal loss, we have broken it. We broke it. Sorry for the bad English. We broke it, then displaced higher, causing a market structure shift. This is a market structure shift. These are market structure shift. Retraced lower, took sell side of that fair value gap, then boom, broke the structure now. These are the things that no book will teach you about them, but I'm teaching you for free over here. Or just to buy bundles and enter YouTube, then you will find all this for free. So we created a market structure shift over here, then retraced, took sell side and pumped higher to break that structure. Now it's evident enough that the prices are willing to go higher. You all know now the prices are willing to go higher. So for those who are now want to do this thing, placing a stop loss here, I hope you are seeing what I'm showing you. Placing a stop loss here, and we finding a retracement back below the 50%, and the fair value gap being mitigated, then displacement higher, is a good reason that the prices are very strong, very strong, and are just about to explode, because all this is happening just below the daily open, which is this line here, the line that I'm showing you, the reason. And imagine these things do happen on a day-to-day basis. They do happen every single day. But now the problems comes if you are not conversant with them, if you have not practiced a lot of times to see them real time. There is where the problem comes. Because mastery requires practice. But the more you practice something, the more boring and routine it becomes. So once you gain some little knowledge about what you're supposed to do, and you learn what to expect, our interest starts to fade away. And that's where impulsivity kicks in. You lose money, but it's not that you have lost it out of will. You have lost it because you are not patient enough to wait for the candlesticks to tell you what the next step you should be taking. So that brings us to the point that the greatest threat to success is not failure, but boredom. You know what you're supposed to do, you know it's boring, you know it's tiresome, but you lack the patience, you lack the discipline, and you lose. So I promise that this will take time. Will take time for you to be good at it. So first of all, the buy side liquidity, the small one, is here. The sell side liquidity we have taken, we took it here, and those are the, I hope you have seen them. Then let's go to the 1 minute time frame. So on the 1 minute time frame, we want to see something very nice over here. You know, I've done this thing for quite some good time now, and what I'm telling you is what I've been experiencing. So it's very difficult to stay focused when you get bored working on this thing. It's very, very hard to stay focused. And many of us will definitely get depressed when we finally lose focus or motivation, because you will start thinking that successful people have some bottomless reserve of passion, which is not the case. Successful people feel the same lack of motivation as everyone else. The difference is that they still find a way to show up despite the feelings of boredom. So, knowing how to read this candlestick chart, knowing how to read price, is not enough for success. It requires many little things that should be put together for you to be able to make money on these undecisive markets. So let's continue the lecture. This is the market shift I was talking about. This is now on the 1 minute time chart. This is the break of structure, and after breaking structure, were resisted. As I told you, the learner session starts at 6, and after 2 hours of each session there is a micro that always happens. So after 2 hours, that is 6, 7, 8, a 4 candlesticks opening here. 2 takes out liquidity to the upsides, breaking the structure, then dipped lower, triggering the sell stops that were here, that were below this energetic run. Remember that fair value, remember that minute 5 fair value gap again. I know you remember it. This is an order block. As you can see it, this one is an order block. Let us see how it supported our. This is an order block. Let me mark it out so that you can see. This one here, it's an order block. The last down close candle before the displacement that caused the market shift and the break of structure. You must be consistent on how you do this thing. The stop loss is also have we defined the stop loss? We are yet to. So let us define the stop loss. 0 is here, 25 is here, 50 is here, 75, then 100. So let us define the stop loss. 25 is here, you know. I decided to put the music on so that I can also entertain you in some way, because I understand how boring this thing is. I understand. So that's why the music is there. It's not for you, it's for me. But it's to keep you awake. It's to keep you awake, because you can easily sleep while learning, and it's very dangerous. So your entries are below 50%, and these are order block. Let me just write on it an order block so that you can know what you are talking about here. This is an order block, the last down close candle before the up movement. So once we take sell side here, you buy on that order block. You are buying. The algorithm is now buying and placing orders like bullshit. You buy. You are confidently buying because the prices have already broken the structure. The market structure has also occurred. We have triggered the sell stops over here. The order block is now the order block is now pushing prices higher, and you can see evidently a displacement higher, broke the structure again. The market structure shift broke the structure. Then we found a movement lower, order block. Then we go. Stop loss, you place it here. We just have to mark it so that there's some people who don't listen. There are some guys hata uambie nini, they don't see sense. Stop loss. So the stop loss is placed here. Here is where you determine your stop loss. So you buy here at the order block. I don't know if you are seeing it. Let me expand so that you can see. This is what I'm talking about. The market analysis that occurred, this candlestick from here to here, all of this is an order block, and you can see the reaction on that order block is just beautiful. It's very, very beautiful, and you cannot deny the fact that it has happened. So let me show you the exit points so that you don't ask me a lot of questions. But I welcome the questions also. I do welcome some. They make me do a lot of research so that the next time I encounter such questions, I don't get off. So your first target, this is a measured move from here to here. The stop loss defined, order block reacted off it, and we moved on. You can see the resistance of the 50%. You can evidently see the resistance on the daily open. This is a daily open. Let me write it out so that you can see. This is a daily open. So these are morning scalp, another session scalp, and as you can see, it's evidently happening during our kill zone session. So I told you our kill zones takes 3 hours: saa 2, saa 3, saa 4, saa 5. This is the period where our kill zone